So you are the hot topic in this town. And they are using words like imploded and turmoil. Palihapitiya burns down what he built. He's imploding. What's the story?
Well, I think it's just one of self-reflection and realizing that at some point I had figured out a formula that worked for me. And in that formula, what I realized was the construction of my firm, the way that it was, didn't make sense. So like the last 8 or 9 years, I have been incredibly blessed. We've been compounding money at about 31% a year. And so you get a stage in your life where you ask yourself, do you want to be beholden to LPs and a lot of that stuff, or do you want to take a step back and reevaluate how to run my business? And very similar, I would say, to sort of what Buffett went through in his late 30s, early 40s when he shut down Buffett Partnership, rather, to start Berkshire. I've similarly decided that I have enough capital where I think I'd rather make fewer, more concentrated bets and try to own businesses over the next 20 or 30 years than, piecemeal out capital and try to invest in hundreds of businesses hoping to win a lottery ticket.
Were you sort of deciding whether you even wanted to do this anymore? I mean, some of the accounts that have come out about you at Social is like he's not showing up for investor meetings anymore. He seems to be disengaged, and when he is engaged, he's ruling like a dictator. Is that true?
Well, I think it's probably true in the eyes of the people that felt maligned or blindsided by the changes that I made, and I think it's their right to sort of feel that way. Now, at the end of the day, I, as the majority of the capital and the ultimate decision maker, which I have been since day one, have the right to make the decisions the way I choose. And people can walk with their money. People can also walk with their careers. To the extent that I transition people out, I try to do that as humanely as possible to them. But the reality is, when you're sitting on billions and billions of dollars of capital gains and I transition people out, it's obviously going to upset them. The reality is that we did a lot of very good work. I thank them for that. But the next phase of this business is about a different kind of person working beside me and different kinds of decisions. It's not about constructing 100 company portfolios anymore. It's about owning a few iconic businesses that I think can transform the world and putting enormous amounts of capital and effort behind those and those only.
So you've given money back to your investors, your LPs. You're not taking in any money anymore. And what I read was that you said of your investors, if they're upset because of that, to all the people that worked for me and whose money I took, you're effing welcome. You making friends or enemies in this town?
Again, at the end of the day, if you're running a family office or if you're running an endowment, you have a responsibility to make, which is to underwrite a return that is above your cost of capital and that returns money to your investors and to the people that demand of you what you've been hired to do. Similarly, I was asked to do that job as well. I think that when you go and you do that job, and you do it, frankly, as far as I can tell, at the best of our industry. I mean, 31% a year seems quite reasonable in the grand scheme of things. I think it's quite unfair then to also, on the other side of that, be sniping and throwing bombs as well. I think you can be upset that I no longer want to manage other people's capital. I think that that's completely fair. But I think that there's a level of character and a level of behavior that should have been expected, which I didn't see, and it was sort of a response to that, which is typically when someone does a good job for you. I've had lots of people work for me. When they do good work for me, I say, thank you. I really appreciated that.
Did you think about shutting Social down? Do you still think about it? Are you committed to whatever Social capital is going to be in the future, and what is it going to look like?
We have a couple of really interesting things that you'll see over the next few weeks and months, but I think the reality is we've been busier than ever. We've been taking a lot of really interesting investment decisions in very hardcore science that I think can be really disruptive. At the same time, and again, you'll see this in the next few months, we've been making some incredibly enormous investment decisions of hundreds of millions, billions of dollars of capital, and you'll see those as well. And so we've been busy, just not in the typical way. We're not standing in line trying to do a $5 to $10 million Series A. We're not sitting around watching all that money getting pilfered back into Facebook, Google Ads, Amazon. We're making very different kinds of decisions in companies that we think aren't beholden to the large tech giants, aren't beholden to the traditional investing cycle in Silicon Valley, and as a result is probably the next wave where billions or tens of billions of dollars can be made.
So you're saying you're still going to look for these exciting new things, but you're going to do it on your own time frame. You're going to hold them as long as you have to hold them to realize whatever you'd like to realize and not beholden to anybody else who's pushing you to do that.
In fact, and the learning on this was one that has frankly cost me billions of dollars personally. You know, there was opportunities for us to invest in Uber all the way into the Series, you know, B, I remember, when Menlo called and Benchmark and, you know, on a Sunday night just put in $10 million, and which would have turned out to be a multi-billion-dollar piece. And I said no because I didn't understand how an investment like that could sit inside of a very traditional venture portfolio. That was my mistake. I've made similar mistakes like that in the past. You know, one of our biggest investments is a company called Slack. And I still think to myself, why did we not just lead every single round and write the entirety of the fund into that company? It was obvious from day one that Stuart Butterfield is an iconic CEO and that Slack is going to be one of the most important tech companies in the world. The reason I didn't do it, Scott, was because I was running a fund. And I had employees, and I needed to generate fees, and these funds had LPs. All these mechanics and guardrails that were not necessarily coupled with making the most amount of money. It was coupled with the business model of being in the investment life cycle. And having the freedom now to step away from it, I took it. And I think it's an incredibly exciting time for me personally, although it can be very jarring and upsetting for those investors who now have to go and find other places, probably not as good, to allocate their money.
You brought up Slack, so let's go there. What, you own 10% of the company? You're on the board? I know you're limited about what you can say as a result of all of that, but when can we expect it, and why the direct listing, and do you agree with that decision?
I love it. I mean, I think that the decision-making that Stuart has taken is incredible, both in the way that he's built the company, he's transforming the culture, he understands the product to a level of sophistication that I have not seen since Facebook. You know, when I was in the bowels of Facebook building that machinery, what I saw was a team that really understood product market fit and the power of network effects, and why that created an incredibly subsidized business, a thing that could expand all over the world at marginally zero cost. The only company in the world that looks like that today, that is not yet public, is called Slack, and it will be soon. And so from that perspective, I think it is the most incredible business that we have seen. Probably the next closest thing to it is a company that just went public recently, which is Zoom.
So we obviously talk a lot about, you know, these hot new IPOs coming to market, valuations. You know, some suggest, you know, some are getting a little over their skis, the way that these numbers have been pushed up. Do you agree with that? You look at all of these that have come out recently.
So look, another big reason why, you know, I took a step back from the traditional investing game is that that game is in part rigged, but it's also in part fundamentally broken. Why? Because as you raise more and more funds with the goal of just generating fees, you need to allocate those into companies that are seemingly reasonable, where you won't lose your job. What that's resulted over the last 5 years is an enormous glut of money that has gone into enterprise software businesses. Why? Because there isn't this binary product market fit risk bet. There's some revenue. You're selling a product to a customer who's willing to pay for it. But the dirty underbelly of all enterprise businesses is that you spend an enormous amount of money on sales and marketing. So much so that right now, most of those companies have no line of sight to being profitable, and some of those companies are actually gross margin negative. And they're all raising capital from venture capitalists on the back of this idea of growth, 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 growth. Now, I look at that and I say to myself, all of these venture investors are telling me that because they like enterprise, I actually should take a step back. When they are greedy, I am fearful. I particularly don't like the enterprise space, X of Slack and probably Zoom. And there's maybe a handful of others around the edges. But beyond that, I would not put a single dollar in enterprise. It is overbuilt, it's overinvested, they're highly, highly unprofitable, and the real winner is Facebook, Google, Amazon, and Microsoft. So from my perspective, the actual companies of value right now are consumer. Look at the multiples of Facebook for the amount of cash they generate. Look at the multiples of Google. Look at Amazon themselves. Those are incredible businesses that you can own, which are much, much better bets.
Well, you're describing sort of obviously well-established and thriving businesses. I'm somewhat surprised to hear you say that the enterprise side is the one that's overvalued, whereas the consumer side looks reasonably valued, when a lot of the consumer companies are not profitable and have no roadmap really to profitability.
I think the conventional wisdom there is a little misset. Again, I think that right now investors have a tendency to be late to the party. And when the music is on, as my friend Bill Gurley says, they love to dance. And right now, the enterprise world is the one where investors can look smart enough to their LPs to raise subsequent funds, which is really a backdoor mechanism to just generate more fees and pay themselves a salary. And so enterprise as a class is very challenged. There are a few, like Slack, which are exemplary, but most we will find are incredibly overbuilt, overstaffed, very difficult to get to long-term sustainable profitability without being acquired by the big stalwart enterprise companies.
I mean, there's a Snowflake is one that's hanging out there. We discussed it with our multitude of guests yesterday. That's in the enterprise space, the data cloud storage, a hot area. You look at two companies in the enterprise space. I say Zoom and Slack, and then everything else is garbage.
If you need to spend money to acquire customers, if I'm a buyer of stocks, what I will tell you is be very careful of the company that fundamentally does not have a product that is compelling enough to win customers naturally. And that the way you overcome a reluctance to use one's product is through the brute force use of money. By hiring salespeople, by spending on ads, by taking them to events and to dinners. If you as an investor look at those line items in a company, you will understand how good the product is or isn't. And then subsequently, what one should look at is how obvious it is for them to generate an incremental dollar from the dollar they've spent, or what we call negative dollar churn. And when you look at those, what you see are companies that are awash in horrible business practices and fundamentally crippled businesses that are subscale. And so if you like the enterprise, which I do, you want to find ones that have a natural law of expansion that is not coupled from how they spend money. There's Slack, and then there's Zoom. Everything else, as far as I can tell, literally everything else, you have to spend money to make money. And unfortunately, the money you make right now is at best break even and sometimes less than what you spend. That is not the economics of how one makes a sustainable legacy business.
Would you buy Uber then on the IPO?
Well, the Uber and Lyft companies, to me, represent a very different example than enterprise and consumer, quite honestly. I think that what these are utilities. And when you look at a utility, from my perspective, what I look at is the cost of capital. Why? Because these businesses really represent the spending of money to acquire drivers and eventually, I suspect, to acquire physical assets that they will need to put on the road to provide enough liquidity to maximize consumer demand. When you say it in that way, Uber and Lyft sound very similar to airlines, to other modes of transportation. And in all of these things, what you see is a race that is bound by the cost of capital. Meaning, over time, in scale, companies who have a cheap way of generating cash, meaning going to the capital markets, to the debt markets, they will compete. Why? Because it is cost effective for them to do so, and the unit of competition is not that unique in and of itself. The people will drive for multiple services. The cars themselves are assets that will be used across multiple services. And so my perspective is it's a huge consumer win, and the ones that are at scale, like Uber and Lyft, will do well. From my portfolio at this point, at $100 billion and $25 billion valuations, I think there are much more interesting businesses that you can buy that can trade on growth and profitability and not cost of capital.
You like one over the other when it comes to Uber or Lyft?
I mean,
or
I think
view them in the same prism.
Well, I think I view them in the same prism. I think that if you need to buy the winner in the category with optionality in other businesses, one probably has to buy Uber simply because
Eats and all these other areas. That
exactly,
they
you give
can
Uber
monetize.
Eats, it gives you international exposure. It's not clear where the real profitable markets are. The profitable markets, if they are not the tier 1 cities, then Lyft wins. But if they are the tier 1 cities all over the world, then Uber wins. If it's actually just an investment in eating, then Uber Eats wins. If it's actually an ownership in Didi, then Uber wins. So it's very complicated how one makes the decision. You either buy both or you buy neither. And I choose to just own Slack.
Okay. And a nice piece of it. So I want to get to your former employer, that being Facebook. You were a big proponent of that company for a obviously long period of time. It turned you into the financial success in many ways that you have become. Now you are a critic Why? What do you see when you look at Facebook?
Well, look, I mean, the reality is that I got to a point in my life, largely when I became a parent, where I had to really start to think about what social media in general was doing to my children and what it was doing to the social norms that they were being raised in. And I didn't like them, to be very honest with you. And I don't think that they are completely to blame, but I also think that they have a responsibility in that debate and in that argument that is more meaningful and significant than any other company in the world. And so I made a decision personally for my family that it was time for me to put very strict guardrails around how I use social media in general. I limit it to Twitter. I don't let my children use any form of social media. I frankly don't let them use devices at all if I can at all avoid them, simply because I think we're at a point in time in humanity and in society where the use of social media, whether we like it or not, is coupled to mental health. And the more one uses it, I think the more unhappy people generally are.
Yeah. You sold all your Facebook stock?
2013 or 14, I sold it all and I moved it to Amazon.
So you gave this, what is now widely talked about speech at Stanford, right? Where you said social media, I think the words were ripping apart the fabric of society, or I'm paraphrasing, but something along those lines. You don't believe that there are any companies out there that you can be a believer in. You just think social media as a thing, a being, is bad for society. Is that what you're saying?
It has a spectrum of uses. But with anything, if you were to, for example, eat only one thing, sugar. Sugar in and of itself in small quantities is not bad. Sugar every day for you is bad. Protein. Chicken breast is not that bad. If you eat it every day, I'm sure you'll suffer some consequences. Bacon, a few pieces, is not that bad. My point is that all things in small doses are very useful. And social media in and of itself is quite great because it empowers people. And it empowers democracy. And it empowers truth and information. What it also empowers, which we need to realize, is the narrative fallacy of how other people live their lives. And what we don't yet have is some warning or disclaimer that tells us most of these people are lying to us. Don't believe the hype. And so don't feel so bad about yourself. And I know that may sound quaint, but I think that roughly summarizes what hundreds of millions of people probably go through, not in a meaningful way in one shot, but in small microdoses every time they use whatever form of social media that they adhere to. So my only point is, use it in small doses, use it in ways that allow you to be informed and be engaged in the world, use it to connect with the people you love and care about, but also understand that if you are not careful, you will misinterpret the fact that everybody has become their own little PR agency, telling a story to the rest of the world about their lives that it's fabulous and fantastic. And the reality is, we live complex, nuanced lives, and life is hard.
So what do you think of the job that Zuckerberg has done? All of the turmoil that's happened.
I think
talk about turmoil in social capital. I mean, the turmoil at Facebook over the last year.
He's done a great job. A lesser CEO probably would have imploded that company. So he's probably done more to save it and give it a chance to repair itself than anybody else. That has to be rewarded. And I think, if you look at the stock, it roughly has been. But he has a very, very complicated, treacherous path ahead of him. And a lot of it doesn't have to do with him. It's how governments individually react to what they perceive the threat of Facebook to be. So you already see this happening, unfortunately, in the country in which I was born a week ago, these horrific bombings by Islamic terrorists against Christians and against Westerners in hotels and churches. And the first thing that Sri Lanka did was shut down Facebook and WhatsApp because they were worried, not that the people in Menlo Park were doing something wrong, but that the mechanism of how it worked was uncontrollable in a way that could have inflamed a civil war. In India, they went through the same sort of consternation during the Indian elections. The point is, all these governments are now thinking about the importance of their own democracy, and they want not just the kill switch for these products, but a backdoor into these products. On the other side, Zuck wants to unify them all into a very secure network. It's going to create enormous complexity in how the business is run. He's probably the only one who will be capable of navigating it. But that's the complexity that awaits Facebook. On the other side, I think you'll also have governments who have a point of view on data localization and the taxing of profits. Will governments be okay with enormous amounts of money being made on their shores without people there on the ground and without the data being in servers there, that's probably the trend as well.
You think these companies can self-regulate themselves, or do we need some form of regulation? Zuckerberg and company seem resigned to the fact that that's coming.
Everything at scale needs to be regulated. Not because the regulators themselves know what they're doing, because I think that's probably a coin flip at best, but it creates ground rules that create transparency and fairness from smaller competitors all the way to large competitors. And over the long arc of history, what regulators have had the tendency to do is the right thing. And they've tended to put the right infrastructure in place so that consumers are protected while capitalism roughly is allowed to run the way that it's meant to run.
So you sell all of your Facebook, you put a large part of it, if not all of it, in Amazon, and you've been riding that since? I mean,
that investment has worked. It's worked. I mean, you know, look, I've had to sell to fund all kinds of things. But it's been in, you know, the reason people ask me, like, why did you do it? And it had nothing to do with Facebook. It was just an ardent belief that Jeff was the single most important entrepreneur of our generation, building the most iconic company. You know, when I was at Irisone 3 years ago, I picked Amazon as $1 trillion business. Mm-hmm. And it's roughly because it's the most obvious tax on the internet and computing and any form of technology. So if you believe in whatever's happening in the world with respect to what computers will be able to do, Amazon will be the most direct beneficiary. If you believe that GDP expands in capitalist countries because of people spending money, Amazon is a direct recipient. So however way, they win on the consumer side and the business side. And I also wanted to divorce myself from being too emotionally linked to the company that I was, you know, a principal in helping to build. Because it's very hard for me to make decisions to buy and to sell, knowing the people that are in the seat. With Amazon, I knew one person at an arm's length distance who I could understand, which forced me instead to ignore the people and to focus on the balance sheet. And that story told itself.